Yes, I am your host, Richard Franzi, and this is podcast episode number 1154.
That was a woo.
Woohoo!
Oh, yeah.
Hey for us. And Kaaren Hall is guest 1,468.
Sweet.
Even bigger number.
That's my lucky number.
Is it?
Well, it's a coincidence.
Of all the numbers.
Of all the numbers.
The infinite possibility of numbers.
It's that one.
Making the right and smart investment choices is crucial to getting the most you can. uDirect IRA Services helps thousands of Americans invest their IRA outside the stock market into real estate, land, and more to improve their financial future. Kaaren Hall shares how her firm, stay with clients every step of the way, making sure they learn to earn. Kaaren, welcome to the radio show and podcast.
Thank you so much.
It's nice to have you here. Do you have a personal story that sort of helps our audience of other entrepreneurs and business owners sort of to get you as an entrepreneur and business owner? Anything you want to share?
Real quick. I mean, grade school, high school, college, radio announcing for 17 years, made the logical transition into real estate, into mortgage, into property management and so forth, and was a trailing spouse for a while.
Okay.
And then, boom, there goes mortgage. We all know what happened there. And I made the transition into self-directed IRAs 11 years ago.
Why?
Because I was in mortgage before, and so got into the industry, worked with another firm for a couple years, and then branched out and opened my own.
Okay. And so let's talk a little bit about the kind of clients that you help. We like to understand from our guests the successful markets or niches that entrepreneurs have focused on.
Right.
Can you categorize your clients into a niche or niches and
I really
share that?
can't, because really to qualify for an IRA, all you need is earned income. So it is pretty broad in that sense. But you need to have some level of sophistication to understand investing outside the stock market.
Right. Yeah. So who is that then?
Okay, well, it's largely business owners and people who are looking to retire. You've got your money in the stock market and you're thinking, it looks pretty good right now, but can I rely on that? I'm going to retire. This is my horizon. Maybe I should diversify, put some alternative assets in there. So it's those people who are thinking in that way. Okay,
so now we're starting to put some descriptions around a potential niche. So these are people who can see their retirement future coming?
Yes.
So they're not 20-somethings?
Well, they could be, but yeah.
Okay.
They're very
but
wise
by and large,
20-year-olds.
right?
Yeah,
the rare. They may be the rare 20 or 30,
the rare ones,
20 or 30-year-olds.
Correct.
Who have a certain amount of investment capability. Is there sort of? Are you looking for a certain amount of funds that would make sense, or how does that get structured?
Right. When it's self-directed, they're picking the assets. So they say, "Hey, here's an asset I want to invest in. Do I have enough?" So by the time you're 30, you may have worked somewhere, left that job, and have a 401k to roll over.
Right.
And you can take that money and boom, maybe be a partial investor or like a private placement and get in if you're accredited, or find a deal and partner with somebody at that age and then build your retirement that way.
Okay, so how did you pick your company's name, uDirect IRA Services?
It was really, thanks, no one's ever asked me that. It was just really important to me to have a name of a company that described what we did. And a lot of names were taken, but I thought, it's self-directed, uDirect. And that's why we came up with that name.
Wow. And how long ago was that?
9 years ago, 2009.
So did you expect to be where you are today 9 years ago?
Oh, boy. I was happy to be alive the next day. It was the recession. And
there was a recession?
Oh,
9 years ago?
I think someone forgot to tell you.
Oh, I totally missed it.
I know. Well, if you read the paper, you go.
I launched my business in 2007.
There you go. Oh.
Right.
Ouch.
So, I'm very aware of that. Right.
Well, it was good. It was a great time for self-directed IRAs because you couldn't find capital. Banks were just folding, dropping like flies. And so where are you going to find money? And people figured out, hey, guess what? There's like 20-something trillion dollars in American retirement. And that money is like maybe 3-4% in alternative assets.
Okay.
So, hey, I'm raising capital, pretend. And you've got an IRA. I'll come to you. Hey, you want to invest in my deal? You say, sure. You don't even know what a self-directed IRA is, but now instead of going to the bank, I go to you, my friend, and you lend money to my project, either in debt or equity position. Boom, we're going to town. So it was a grassroots way of taking funds, retirement savings funds, and using them to refuel our economy.
So it's a different value proposition today, I would think, Kaaren, than it was when you first started. Was it? Can you think back to those early days when when uDirect wasn't what it is today?
Yes.
And what was that process like to convince people this was right.
They'd say, well, okay, I've heard about you, but how many accounts have you opened? And I'd be like, six, you know.
Right.
But the nice thing is I'd already for 2 years established a reputation with another firm. People knew who I was. I spoke at all the real estate investment clubs, and they'd say, hey, this is my friend Kaaren, you know, open an account with her. And so it was through that mutual trust and referrals and the network.
Was speaking an integral part? Did you do that knowing that would give you brand credibility, or did you do that because you like to stand in front of an audience and you're a good public speaker?
See all of the above.
Okay.
Yeah.
But there was a strategic element to it.
Of course. And plus, where are people who are investors are at real estate investment clubs? And in those early days, I mean, obviously it wasn't 2009 exactly, but ultimately there were the REOs where you could get real estate for pennies on the dollar. Wow, that was such a popular asset for self-directed IRAs because the growth is tax-free in a Roth or tax-deferred. How'd you like a tax-free house?
Right.
Yay. You know.
Yay for you.
Yeah.
So tell me a little bit about the firm before we move on. I know of you through people that I met who work with you.
Yes.
So obviously you have that. So
Yes.
what is the structure of your firm?
Well, like we're LLC with an S corp election. Is that what you mean? I mean,
You have people?
We have people. We got people too. We've got which really helps. I'll tell you. You know, I found. I mean, maybe it's just me.
Maybe.
We've got 10 on staff, and
Wow.
so that's great. So we've got we're divided into 3 departments: opening the account, getting it funded, bringing the money in, and then investing. So we have people. So when your IRA is investing, you're going to be assigned to one person who holds your hand through the whole process. And people really like that. It works out real well.
I think that's when they open. When I said you're making sure they learn to earn.
Yes.
What is behind that?
Learn to earn. Well, I think that we cannot recommend a certain investment class, but we can teach about investment classes. So what I did subsequently in 2012 is open a real estate investment club, group, association, and we're called OC REIA, REIA, so Real Estate Investors Association. And OC REIA, every month, we have a speaker, and they're not selling you real estate or pitching to you, or it's not a sales thing, but they're teaching you about maybe multifamily or mobile home parks, or they're teaching you about, just so many different kinds of asset classes, even precious metals, or, not so much in a real estate company, but what else do we talk about? The different strategies, tax strategies with self-directed IRAs.
And who comes to it?
Boy, a lot of people, we get 50 to 100 people every
Really?
month. Yeah, we're meeting on the 11th. We're having a note panel.
What?
Right. So 5 people who are experts in the note field, where it could be trust deeds or buying and selling, even junior liens, performing and non-performing debt. One of our speakers is a loan servicer for private debt. So an IRA can buy performing and non-performing debt. An IRA can be at the bank and lend the money. So we've got a really great moderator, Bill Tans, and he's going to be moderating this panel of 5. And it should be pretty lively.
So do you find the typical IRA person who has an IRA is comfortable understanding these alternative choices?
Not at first.
Okay.
Not at that. That's why we have the group is to teach. Learn to earn. So maybe you don't understand it today, but then you come to a couple of meetings and then you network with other people. Hey, how did you do this? So at every OC REIA meeting, we have something called a deal profile, where somebody comes in and says, "This is how I found the deal." Because everybody wants to know, how do you find a deal?
Right.
How do you even? And then when you get it, gosh, you've got this cat by the tail, tiger by the tail. What do you do with it?
Right.
And so, and then the person who's speaking will talk about their exit strategy. So if it's real estate, they found it somehow. Maybe they rehabbed it or just did a little lipstick, and then it was either maybe they did a buy and hold, or they did a flip, and improved the property and flipped it to somebody else, or whatever, they're going to hold it for the rest of their lives, or maybe they're going to do an Airbnb,
Right.
some sort of exit strategy.
So people are learning from others.
Correct. Oh, it's all about networking. Yes.
Okay, I believe in the power of peer learning.
Yes.
Right, and that's what this is all about. Then
It
you're
is.
bringing together people who have knowledge and people who are seeking the knowledge.
Exactly, and you may not learn this at a university. I mean, this is on the street, in the trenches kind of investing.
Right. Right, but you've built a community now. Helped
Yes.
thousands of people.
Yes.
I said that in the open.
Thousands.
Of people.
Count them, thousands.
Once you get a client, do you keep them for a long? I mean, is it a transaction or is it a kind of a relationship?
It depends. I mean, it's kind of a transaction, but the average life of a self-directed IRA is about 7 years. So a lot of times people will find a deal.
Okay.
and get into that deal, and then the deal will complete. Maybe it was a buy and hold or whatever it was, but now they're done. And so if they don't have another deal going on, which you really want to always be looking for your next deal.
I would think, yeah.
Yeah, but you're right.
Okay.
So they'll take the money and put it back in Wall Street for a while,
Okay,
until they find their next deal, maybe bring it back, or maybe just leave it there. So we have people on all areas of the spectrum.
So, sidebar, is it harder with the economy and the stock market raging like it is now to convince people they should diversify, or is it easier because they're feeling this kind of accumulation of wealth and their risk, they want to protect it?
Yeah, I'd say that the robust stock market does not make people feel like, oh gosh, I've got to look for an alternative. I'll tell you
Right.
that, but we're not convincing anybody. It has to be self-directed. So we teach, hey, this is an opportunity, a choice you have. This is a tool you can use. And once they realize it, they say, wow, I mean, what are, their lights, little bulbs go off in their head. Look what we could do,
Right.
And so we're not convincing people to open accounts so much as we're teaching them the power that they have and what they can do with it.
I like to ask guests about unintended consequences. My latest book is about unintended consequences of strategic business decisions. Can you think of a time where you made a decision and when you implemented it, the outcome of that strategic decision was different than what you expected, intended, or anticipated?
Oh, I mean, sure. I mean, I got shareholders initially. So I had some people help fund the business initially.
Okay.
And so they came in and I thought we were all friends and we'll just be pals. And then it's like, okay, like shut the door on friendship. Now it's all business. And that was very surprising because from these people, I didn't expect it, but it's like, okay, that's fine. And so we had a 5-year relationship where they got a good return and I bought them out and we parted ways and in a friendly way. But that was an education. I mean, there was some drama like every other
Partner.
entrepreneur
Right.
who ever had a partner.
Right.
It's just every single time. So God bless them. They helped me and I'm grateful.
So can I ask you a follow-up?
Sure.
How long after you signed it and you were in this partnership did you begin to realize their expectations or performance was different than what you had anticipated?
Pretty much straight away. I think they were passive shareholders and they thought they were active shareholders.
Oh, wow.
So they were getting involved.
That's a big difference.
And they kept asking for things. Well, can I have this? And it's like, well, there's part like being nice. Like, yeah, it doesn't hurt. You can have this. Sure, you can have this. And then it's like, okay, we got to put the brakes on this. So, and ultimately we just came to an understanding.
It's, how many were there? How many?
4 altogether.
That's hard.
Yeah.
Right.
Herding cats. Yes.
You read my mind, right? And it just takes, sometimes they feed off each other too a little bit.
Yes, they do.
Right? One gets an idea and then next thing you know, you're defending it against 3 other people. And yes. Partners, they're wonderful. Let's move on. Can you share with our audience, because earlier you talked about peer learning. I talked about it as evidenced by your events, but I believe that we can learn a lot from other peers, people that are doing what we're doing. Can you think of a mentor or a time in your career where someone really helped you with just their knowledge of what you were trying to get done based on their experience? And
sure. I mean, I have a friend who, when I was in the mortgage industry, who taught me about the mortgage industry. I was in real estate, and they taught me about, well, hey, mortgages. And then I would just by osmosis, just keep learning more and more by hanging out with people. Like, oh gosh, all the various aspects of mortgage lending, of which there are so very many.
Right.
But I think that's when I was a mortgage lender and in that industry, I didn't understand how to originate a loan. I started off, we called it cleaning up after the elephant. I was in servicing, right? And then got into origination. And so,
is there a lot to clean up after the elephant? I know what elephants do.
We'll talk, But yeah, so yes, there's a lot. But learning about origination was so interesting and what you could do. And again, the power of leverage. And that's how I learned from other people.
So we've asked our guests who are leaders of organizations, entrepreneurs, for their guiding principle. This is what I mean. Of all the things Kaaren, and is there a internal philosophy or code that you have brought to this business that is kind of defines the culture and also kind of sets your governance for your company as it continues to grow? It's
just, wake up, suit up, show up, every day, put a smile on your face, positive attitude, and help people. That's what we're there to do. Okay. Have you found is it challenging to add people to your staff? I mean, are you able to find the people that you're looking for? I haven't had a problem. Okay. I haven't had any trouble with staffing. So that's, thank goodness, a lot of people do. But I think that because I'm part of a community, if there's an opportunity, I can put it out there. I just brought in a new outside salesperson who's part of the real estate investor community, and she's going gangbusters. So very, very happy with her. So where are you going? What's your vision?
Nothing confidential, but where do you see the company?
I mean, we're not going to be the biggest self-directed IRA company on the planet, but we're going to be the best. And we are just that in our service. You know how it is, like you're in the middle of a transaction and you've got someone on the other end of the phone that's helping you with this transaction, and you call and they're not there. You get somebody who's been there 4 days and they're at a call center in a foreign country, and you're like, where's my person that I told it, that I invested in with all this time.
Right.
And so we don't have that. When you call our company, you're going to talk to the same person, and they're going to be able to pick up where you left off, and you're going to have a relationship with that person. Oh, hey, it's me. I'm doing another deal. Oh, great. Well, and then you know each other and you understand how it works. And so that's how it is that relationship provides the best service.
So customer service, customer experience is important to you.
Extremely.
Okay. Is that based on your direct experience or your knowledge that it's not done well in your industry, or if it's just the right thing to do for your clients? You know what I'm saying?
It's all of it. But right. So when we hear complaints about other competitors, and they'll say, well, they didn't do this or they didn't do that, and it always revolves around service. And so they'll say, well, I've seen really good things about you, really good reviews about your service. And so right. And it's also from being in that investor seat, wanting somebody on the other end to be knowledgeable. And so the people that we have at the office are seasoned, and they've been there, like 7, 5, 4 years. They know what they're talking about.
So I find it interesting that on one hand you hold your team and yourself to a very high standard of customer experience.
We do.
And then on the other hand, you found it easy to find people that fit that model. Because how do you interview for people that have that belief that customer experience is kind of really important?
As an entrepreneur, when I first started the company, I didn't know. I didn't. And so I didn't even know what I was hiring for. I just, shot it up, against the wall and just say, is this going to work? But as we progressed, I think 2013, we call it the Prozac year, okay? we went through a few people, but it really taught me what to look for.
Okay.
And what skills does a good person have, a person who's going to succeed in our company, and that has to do with their attitude 100%. Well, I'm not saying anything revolutionary. It's always the attitude. You can't train attitude. You can train skill, but not attitude.
Right.
So looking for that attitude, and also a real estate background. Maybe they were a processor or they worked at an escrow title company, but they understand the language. And so those are some of the skills that we look for.
Yeah, because I would think there's a lot to know. You've used terms that if you're not aware of what you're talking about, you might misunderstand.
Yes,
and so
jargon.
Right.
Yeah.
And that would be hard, especially with investors, and you
Yeah.
want to be able to demonstrate the level of competency to be trusted with their money.
Well, that's true. When somebody comes to you and they've got a sophisticated deal, you don't want us to say, well, gosh, we really don't understand this deal.
Could you go over that one more time for me, please?
Oh, you're trying to do what? Oh, I've never heard of that.
Right.
No, we don't
Oh, that's
say
so
that.
interesting.
Yeah.
Tell me more.
I can't tell you the thousands and thousands of transactions that we've processed and learned so much through each one, how things can be different. And we've come up with new guidelines and streamlined things and just learned so much along the way. But we have seen just about every investment you can imagine.
So this is if you can't answer this question, that's fine. It's not on the script. It's just a question.
Okay.
You said the term $20 trillion earlier in this discussion.
It's $27 trillion right now.
And what is that number?
That number is comprised. That number is the dollar amount of retirement accounts or retirement account value in America. $8 trillion is IRAs, and then it goes down from there. 401ks, annuities, maybe defined benefit plans, things like this. So it's all retirement money in America.
That sounds like a lot.
It's a chunk of change. It's bigger than the national debt right now, I think. Let me see my national.
Well, hold on.
Yeah, give it a minute.
Yeah, right? Give it a minute. Okay. So, Kaaren Hall, if someone would like to learn more about your company, how do they find you online?
Yeah, uDirect, the letter U, uDirectIRA.com.
That's simple.
Yeah.
Well, thanks for being a guest on the show,
Thank
a
you.
friend of the program, and a part of the critical mass community. It's been fun.
Oh, really appreciate it. Thank you.
Thank you very much. I'd also like to thank our engineer, Paul Roberts, and our producers, without whom literally we could not do this show each week, Joan Park, Crystal Nunley, and Haley Stern. If you'd like to connect with me on LinkedIn, I'm Richard Franzi, Franzi. And until our next show, I hope all of your business decisions will move your company in a positive direction.